Thank you, man. Thank you. Wow. All right. So for the video, I will explain once again. Sorry, guys. So step one, we're looking for key levels on the weekly and the daily time frame. This is the key levels I'm looking for. Order block, fair value gap, breaker blocks, highs and lows, and CRT highs and lows. In this case on gold, we got this CRT. So we got CRT high. The CRT high got purge right here. And it got purge right here also. And we got the CRT low right here, which it can be a nice target. We also got a weekly order block right here. And we got a high right here. So first thing first, we marked out key levels. And this is the drawn liquidity. Drawn liquidities are key levels. Nothing else. So step one. Step two is I'm looking for market structure. And for the market structure, I'm looking at specific time frames. Okay. So for example, we got weekly key levels equal 4-hour market structure. And daily key levels equal 1-hour structure. All right. This is the time frame I'm focusing on. I'm not going under it because it's making too much noise for nothing. Weekly key levels equals 4-hour market structure, and daily key levels equal 1-hour market structure. All right. So if we go here, and now we are on the 4-hour, what we can see here is, so first thing first, you know, guys, what market structure is. So if I go here, so market structure, you got three type of market conditions. You got bullish, we making higher highs and higher lows. We got consolidation, so we stuck between a range. And we got bearish. Oops. So bearish, which is lower highs and lower lows, right? Pretty simple. This is like the beginner stuff. But the beginner stuff is gonna save you a lot of stop losses. Trust me. Okay, so bullish, consolidation, bearish. So we are here and we are looking for market structure on the 4-hour because our key levels are on the weekly. All right. So what can I see? Okay, so we got highs, higher highs and higher lows right now. Okay. And this move, we break the structure. Okay, so market structure shift right here. And market structure shift, there's a difference between a true market structure shift and a fake one. Okay. A lot of people getting trapped with market structure shift. And this is another cheat code for you guys. So, for example, we have a bullish structure and then boom, market structure shift, right? Sometimes the market's doing like this, and people think that this is the market structure right here, the market structure shift. And now they're looking for sales around here, right? So you got a low and a order block right here. So guys looking for sell here because they think there's a market structure shift, and then boom, they got wrecked. A true market structure shift needs to be the last low that break the high at all times. Okay? So for example, here, this is the last low that broke the high right here. As you can see, we broke above the high and then boom, we close right here above, under, sorry. This is a true market structure shift. And let me, like, for example, right here. People think this is a market structure shift, okay? But the thing is, this low didn't break the high, okay? This is the last high. So look, we got low, high, low, high, low. This low did not break the high. All right. So now people say, oh, okay, market structure shift. Okay, let's go. We are looking for sales. And then they got wrecked. All right. The last low that broke the high will be this one. All right. Look, this is the high. This is the low. This is the last low that broke the last high. This is the that will be the true market structure shift if we broke under this one. All right. Did you guys understand now?
Yeah, I think that's where a lot of people get trapped as well.
Oh yeah, they're getting trapped a lot
Yes,
here.
well,
They're getting trapped a lot. Okay. They thinking this is a market structure shift. They get wrecked. Right? So
yeah.
for example,
So
this
I've got a
is
small question, bro.
yeah.
So, for example, in this example, you said once price takes a weekly high or CRT, for example,
Yeah.
you want a 4 hour. So, are we waiting for a 4 hour market structure shift, or can it be just like a 4 hour CSD? Because I've seen in other places where people just take a trade once they get a market structure shift, let's say, just like a CSD, like an order block. So, there hasn't been a market structure shift, but they've had a CSD.
The thing is, when you take out a weekly key level or a daily key level, such as your drawn liquidities, for example, when you see a CRT, this is valid for reversal incoming. That's where
Okay.
CRT comes to play. That's where you got the best entries with CRT. You're not you don't need to wait for market structure shift and then the retest, etc. You're a step ahead with CRT. Okay, and for example, last week, okay, is it this? No, yes, is this purge right here, right? We purged two
Mm-hmm.
times. We purged two
Yeah.
times. So we purged the daily and the week. Yeah, let me see. Let me see something. Okay, so we purge 2 times. Oh yeah, marked out this. It's like this. So you got candle number 1, candle number 2, candle number 3. Yeah. So in this case, we purge 2 times. So the first one here, you got a CRT right here, which is not very clear, right? For me, this is not an entry, but in this case, you got a CRT, which is this one. This is a CRT. Okay. So you got the CRT right at the purge. Plus you got key levels, turtle soup, inside another key level, which was this fair value gap. No, this order block, sorry. It was this order block. And look at the daily. The daily was more clear. Look, this is a clear CRT on the daily, right? Sometimes the setup's not on the 4 hour, but can be on the daily, right? But look, this is a clear CRT right here. Actually, that was my trade on gold. Thursday. Thursday, that was my trade for on gold, literally. So
See, where I would have been tricked is, what's that bullish candle? What day was that? Yeah, that one.
yeah,
That was yesterday. So
that
not.
was the CRT. Okay, and
Yeah.
when you look at reversals, because as you can see, we took out the that was the daily CRT right here,
Mhm.
right? I show you guys on my drawn liquidity channel. I was looking for 2 CRTs. We was here, and I did not open any position till we taking out this, wherever this high or the last low, and so we took out this daily CRT right here, and on the daily, what I saw this big candle that broke above this high, and the second candle, which is this one right here, we formed our order block entry, etc. This is where I entered, and the price falls down right after. But uh, with CRT, that's what I was saying, is you don't need to wait for the market structure shift. So in this case, the market structure shift was this low, right? You don't need to wait till it breaking off and etc. Your entry is right here. You're a step ahead, right? So that's the thing with CRT. Um, so when price taking out your drawn liquidity, you're looking for a CRT. That's the thing.
So just to get this right, so when the weekly CRT has been purged,
Yeah.
do I also need to wait for like a 4 hour CRT to be purged, or is the weekly CRT purges fine? That's what I'm trying to. Because that's where I get sometimes a bit confused.
So
Does that make sense?
yes. Do you know how to enter a CRT trade?
Well, CRT is just purging of the highs and lows, isn't it? And then,
Yeah,
well,
but
from what I've seen and heard, is some people just wait for a order block to be created on the aligned time frame.
Yeah.
So let's say, for example, on the 4 hour, what some people say 5 minute order block once there's been a purge.
Yeah. I'm gonna make it clear during this call. I will make it clear.
Second.
Yeah,
Yeah.
I will make everything clear. I'll go step by step. But
Okay, sure.
yeah. But for now, step 1 for John liquidity for your bias is you're looking for key levels on the weekly and daily. Second step is you're looking at market structure, right? So in this example, this is my live analysis for the next week, by the way. Okay. So we was here and I was explaining that there's a true market structure shift and a fake one, right? This is a fake one because this is not the last low that broke the last high, right? This is a true market structure shift right here. This is the last low that broke the last high, as you can see. And then boom, we break right under it. So now we got high, low, high, low. Did we broke above this high? No. We wicked above. We need a body that we need a strong candle like this. This is a strong candle right here, right? Strong candle. This is indicating us that this is a true market structure shift. In this case, we did not this is a wick. This is a turtle soup. Market structure is still bearish at this time. All right? We are still bearish. So now price did this consolidation. That was this is the first week of December. So it was consolidation. This is where quarterly theory comes into play. By the way, you got accumulation, manipulation, distribution is coming, right? Week 1, week 2, week 3. This is classic quarterly theory stuff. So consolidation, manipulation, and then we did not break above this high right here, right? This is a new high that has been creating in the bearish market structure, right? And we did not break above. We wicked above. Turtle soup. We are still bearish. Market structure now is still bearish, guys. All right. So step 2 is you look at market structure. And I will show you guys more example with order pairs. All right. I will do some analysis on every pair, like not every pair because there's too much, but on like 3 or 4 pairs, I will do a analysis, and this is always step by step what I'm doing. Step 1, key levels. Step 2, market structure. In this case, we are still bearish. All right. Bearish market structure. And now, step 3 is I'm planning what price will most likely do. In this case, we got our drawn liquidities right here. Knowing that we are bearish, I'm gonna look for a retracement first and then expansions, bearish expansions. So what I'm doing is, first of all, I'm looking at Forex Factory for the news, because the news, this is what makes the price moves technically, okay? So next week, crazy news, man. Holy shit. I didn't saw that. God damn, man. This is going to be insane. Next week, guys, going to be insane. Shit. Okay. All right. So we got Monday, Tuesday, Wednesday, Thursday, Friday. All red news. Holy shit, man. Okay. So what I'm expecting is, I'm first of all, I'm expecting some crazy movements, but what I'm expecting first is that Monday and Tuesday can be bullish, because when we are bearish, right? This is, for example, a weekly candle. You got the open. We gonna make the high of the candle, and then we're gonna make the low of the candle, and then we're gonna close, right? This is a weekly candle, okay? We are bearish. So what I'm expecting price to do is, I'm expecting the price to push higher and then dumped right after. So this is a narrative for me. What I'm looking for is, I'm looking for bullish bullish markets for like Monday, Tuesday, and then the next of the week I'm looking for downside moves to reach these drawn liquidities. This is a narrative. So step 1, order block. Order block, key levels. Step 2, market structure. Step 3, narrative. All right. For my narrative at this point, on the 4-hour and on the daily, first, I'm looking for levels. All right. And the levels is pretty much key levels on the 4-hour and on the daily. This is like my short term drawn liquidities. All right. This is my long term drawn liquidities for this week. And now I'm dropping time frames. So daily, 4-hour, and I'm looking for maybe some key levels that can be respected during the beginning of the week. All right. So you get this fair value gap, you get this high, you get another fair value gap, you got a order block right here. So what I'm gonna do is, I'm gonna mark up the key level that did not get respected. So we got a fair value gap here that got respected. So all right, I'm not touching it. The high probability one can be this order block right here, right? Because you got a high right here, so maybe it's gonna turtle soup, and then respecting this order block, and then after that make the down move till drawn liquidity is reached. All right. So step 3, this is narrative. And for narrative, what I'm looking for, I'm looking for daily and 4-hour key levels. All right. So in this case, where's the rectangle? This is a nice key level. And maybe we're gonna turtle soup this high. All right. So this is what I'm looking for. So if price open Sunday and then I see some bullish movements, step 4, what I'm gonna looking for, I'm gonna look for a CRT here. CRT inside this zone. If I see a CRT here, I'm gonna enter sales. That's it. All right. So you get the market structure. So first of all, the last high that broke the last low is pretty far now. It's pretty far. This is the last high that broke the last low. Okay. We did not break above. So technically, if price is just pushing and broke above this, then now we're switching from bearish to bullish. Right? So narrative is step 1, looking for CRT here. Or step 2, looking for buys once this high gets broken. On the 4 hour. Don't look at the 1 hour. Don't look at the 2, 3, 30 minute. It's not gonna work. As I said, weekly key levels equals 4-hour market structure. So this is my narrative for the week, for the upcoming week on gold. All right. So step 1 is looking for CRT at the order block, the 4-hour order block. Okay. Oops. Which is this one. All right. Step 2, looking for buys if we broke this high, which is at 2007.25. 2007.25. So this is my narrative. This is how I build my plan for the upcoming weeks. All the times on every pair. Every pair. If we see, that sucks, man. This window sucks. I can't. Yes. So, do you have any question, guys, for now?
Yes, sir. Sir,
Yes.
we use 4 time frame as our narrative, right? Can we use daily time frame for a weekly draw? I mean, can we use daily time frame as our narrative
Yes.
on a weekly draw?
Yes. Of course. Yes. So.
I tried to create.
So. Okay.
Is this correct? I will send some
Yeah. So
on you.
so that's the thing. Okay.
Okay.
Now for now, weekly key levels are pretty much closed, right? Because when you look at gold, look at these move. This is like weekly moves. Like most of the times, this is a weekly move. This is a weekly move. So when you see these key levels on the weekly that close, okay, it can be respected, you know. But if, for example, the weekly key levels was like way down here, it's too far, and that's when I'm looking for daily key levels. All right. So for example, I don't know, like for example, if we go here, so for example, okay, a quick thing right now, quick thing. If the only key level on the weekly was maybe this low, for example, all right, it's pretty far, right? Maybe the price will not reach here. This is when I'm looking for daily key levels. So look, on the daily we got this low, for example. That will be a much that would be a better like space, right? It's gonna be respected more. I don't know if you understand. So you got this order block, for example, you got this low. So the price might reverse at this point, okay, and not reverse at this point because this point is too far and maybe the price will never reach there, right? So in this case, ah, where okay, was this chart? So in this case, look how close the weekly key levels are. They're close to the price, right? That's why I did not take the daily key levels. But for example, if the weekly key levels was like way down here, it's too far. The price will probably not reach this far. This is when I'm looking for daily key levels. I don't know if you understand.
I understand. Thank you,
Yes?
sir.
Yes.
Patient.
Yes. So for daily narrative, this is when daily comes to play. If the weekly key levels are too far from the price, then now you look for daily key levels, daily narrative, etc. If the weekly are closed, like in this example, then forget about daily because daily will not get respected. For example, this fair value gap, I don't think is gonna get respected. Why? Because look what we have on the weekly right under it. This is a way stronger magnet than this daily fair value gap. All right. So for for that's how I'm preparing for every week. Okay. This is it. This is my analysis for gold. Okay. Key levels. I'm looking at weekly and daily. What I'm looking for? I'm looking for order blocks, fair value gaps, CRTs, and highs and lows. First thing, that's what I'm doing. Second thing, I'm looking for market structure. And I don't know if okay, right here. Why I can't? Oh no, it start lagging. Okay.
Question, sir.
Yes.
On the second step, the market structure. Uh, if we have a CRT that purge on weekly time frame, we should uh, before we take trades, we should have market structure, a bearish market structure first before we trade. If we need to have a bearish market structure first before we take a trade on weekly. Am I right?
Okay, so the thing is, market structure, you want to look at it as um, a trade idea. So, for example, in this case, here we was bearish, right? Market structure told us that we was bearish. So in this case, bullish drawn liquidity was reached and we saw a CRT. This is the direction, and you see a CRT on the same way as your direction. This is when it comes valid. All right. For example, if we are bullish right here, okay, we are bullish, 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 bullish. You're looking for bullish CRTs. All right. If we see a bearish CRT here, you do not take it because it's against the trend. This is when market structure comes into play. Market structure, okay, is for the direction of the price, and you want to follow the direction all the times. All right? Because for example, you're not looking at market structure. You're looking for sell here, here, here. This is not high probability. You're trading retracement. As a trader, you want to trade two things: expansion and reversals. And reversals, okay, like for example, this is a reversal right here. We was bullish, 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 bullish on a short-term basis. Overall, we was bearish. Now you see some bullish, bullish, bullish. This is a reversal. Boom. Right? This is what you want to trade. For example, you want to trade these expansions right here. These CRTs. If you say CRT here, you take it. CRT here, you take it. If you say CRT here, you can take it, but it's at your own risk because this is not high probability. Market structure told you what market will do, right? In this example, bearish, right? We are bearish, market structure shift. When you see this, you're looking for sells, right? So, for example, here, right here, you're not taking any trades. It's against the trend. Every, even if you got some pretty nice moves here, it's against the trend. You're not 100% sure about your positions, okay? But here, you see that market structure is bearish, and you see a CRT here, for example, on this low, on this key level, then now you can position yourself, right? Same thing here. And that's what I did. This is one of my trade that I will break it down for you guys this weekend. Okay. That was one of my trade right here. Why? Because it was a weekly key level. We purged the weekly key level. The market structure was bearish. This is in my direction. That's why I took it. Right? I'm not looking for, I'm not waiting for market structure shift, man. Because look, market structure shift is way down here. It's too late, man. It's too late. We are here. We printing on this move. Right, right. You know, like we're not waiting for this to be broken. It's too late. So now, for example, this week, what I'm looking for, step one, looking for CRT at the 4-hour order block. So I'm looking for a CRT right here. This is in our direction, right? Step two, looking for buys if we broke this price, which is this one. This is 25, by the way. This is 25, but 25. So if we have a big candle, like big candle that breaking out this one, I will look for buys. If not, if I say CRT here, then I will position myself. And this is what market structure is made for. Right? So this is, I have 4 steps, man. 4 steps. I will mark it down for you guys in so step one, looking for key levels on the weekly and daily. Okay? If weekly key levels are too far from the current price, then you look for daily key levels. Right? Step one, looking for key levels on the weekly and daily. If weekly key levels are too far from the current price, then you look for daily key levels. All right? You know what? This fucking sucks, man. I will put it on Notion and I'm gonna share it to you guys right after. It's gonna be way better. It's gonna be way better. So I'm gonna do this. Okay. Step one, looking for key levels on the weekly and daily time frame. Order blocks, fair value gaps, breaker blocks. After this, guys, I will show you some other examples, other pairs, and I'm gonna follow this the same roadmap as I'm writing right now. Okay, to make it clear. So order blocks, fair value gaps, breaker blocks, highs, lows, and CRT. This is my key levels. And then also, if weekly key levels are too far current price. Look for So if weekly key levels are too far from the current price, then you look for daily key levels. This is step one. All right. Step two. Step two, market structure. Once again, weekly key levels equals 4-hour market structure. Daily key level equal 1 hour. Whoops. Market structure. All right. Step two, market structure. Weekly key levels equals 4-hour market structure. Daily key levels equals 1 hour market structure. All right. Step three, narrative. All right. For narrative, so let me delete this. This is a narrative right here. So if then. So for example, if we see our CRT here, then I will position myself for sales. If price broke this level, then I'm gonna look for buys. If then. All right. This is it. This is it, guys. This is how I'm looking at the markets all the time. Let me do another example. Which pair you want me guys to do right now? Tell me.
GBP, GBP.
Which one?
The GBP USD.
GBP USD? Fine. All right.
Yes.
All right. So, step one, looking for key levels on the weekly and daily time frames. So, we're going on the weekly time frame. And now we're looking for key levels. So, guys, what can we see here? Me, I see something very nice. What about you guys? What you guys see here?
CRT, bro.
A CRT? A CRT low, right? That's what you said, bro?
Yeah.
Yeah. This one, right?
Yeah.
Yeah. All right. So, this is a drawn liquidity. Drawn liquidity number one. Is there other key levels?
The lower,
Huh?
uh, the swing low on the other side, on the right side, the old
He-
low.
yes. Here?
The higher one, the higher one.
Here.
That
Yes.
one. Can we
Yes.
use that?
Yeah, yeah, yeah. We can use this. Yeah. We can use this. Me personally, I will use this or the block, which is at the same.
Oh, I see, I see.
Yeah.
I see, I see. It's really good.
The thing is, look, Is it got respected? Yes, it got respected. It's okay, man, because a order block can be respected two, three, four times, right? So you got respected one time. It can be used as a support. All right. So this is a drawn liquidity, man. Another one, drawn liquidity number two. So drawn liquidity number two, and then we got this low, right? This low. So this is drawn liquidities right here. We mark it out, and bullish. Is there 80? There's no key levels, right? On the weekly here. It's too far, huh? Like here is very far. It's pretty far, right? Like this is close, but I don't think the price will go all the way there. Like this is a weekly move right here. It will take out like pretty much 2 3 months before taking out this one, right? So what
So
we
can I ask question? Sorry for Mr. Shop.
yeah, yeah, yeah.
Can I ask question? Uh, uh, the drawn liquidity is lower. How do you face if price go to the opposite direction?
See,
Do you consider that for example the drawn liquidity is lower, then you are taking bearish ERTs all the time. You're finding bearish ERT. How do you how will you change your bias if the drawn liquidity is lower? Then it's going to the opposite side. Do you consider that as losing week or losing trade?
okay. So for example, if price reach here, like how can I change my
Like you 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 pl- uh, uh you choose that drawn liquidity, right? Then it it comes out that the opposite. It's come out to the opposite direction.
oh, okay, so if price like go like this, boom,
Yes, yes. How do you face that situation? Like how do you change that the bias?
market structure, my friend. Market structure, my friend. Right? Market structure. So first of all, we're gonna mark out or drawn liquidity. So for example, we got these, and then on the daily, we can mark out this high, right? This high as a
Yes,
drawn
yes.
liquidity because there's no key levels here on the weekly. It's too far. So the closest one is this high, right? So now, since we got daily key level and weekly key level, the 4-hour market structure can be used, right? So on the daily, we are clearly bearish, right? Very bearish. On the 4-hour, what can we see is so we got this high that got broken above. So for now on, this is bullish. So bullish. So high, low, high. The last low that broke the high is not this one, right? So this is not a market structure shift. The last low that broke the high is this one. Look, you see? Low, the last low that broke the last high, which is this one. It's this one. And we broke above with a big candle here. All right.
Okay, That's
This
interesting.
is a market structure shift. So from now on, we can see some uh, bearish moves for the upcoming weeks, right? But
So the first break was just a break of structure.
this one,
Yeah. So when that broke that, that's just a break of structure. Correct? And the
yeah,
second one is the market structure shift
yeah,
with a
this one,
change in trend, basically.
yeah, exactly. This is a market structure shift. This is a fake market structure shift. This is like to trap people here, right? But to
Question, sir.
to respond as the question that was we're asking is if price go all the way here, what I do, right? That was the question. So for example, if price go all the way here, it's simple. I will look for buys, man. That's it. I will look for buys. If I don't see any CRT here, I'm not taking any trade. We are waiting. You enter the price once you see confirmations. If we don't see confirmations for sell here, I'm not taking any sells, right? So if
Would you?
price pushing and broke this, then we're gonna be bullish. I will look for buys. That's it. I will look at key levels on the daily or weekly if weekly forms any key levels, and then my narrative will be bullish.
Would you consider a turtle soup over 127?
127 here.
Well, 128 hundred.
Yes, right there, right. If I
Yeah.
will
Would you
consider a turtle
consider
soup,
turtles valid if it goes if one that happened there?
um, maybe. Why? Because
Because
we are,
you're still inside the range.
yes, we are inside a range, and also we are inside a key level right here, right? And a key level can be respected two, three, four times, right? So we got a key level. This is a look on the daily. We can see that we are bearish, right? We are bearish on the daily, still. So yes, it can be a turtle soup here. That's why I'm saying that it needs to be a big candle that just popping off right there. Boom. But here, if I see a order block that forms here, or a wick, or a CRT, then it's gonna be good for sales. We are still bearish, man. But on the 4 hour, we did a market structure shift. So that means that's why this is a drawn liquidity right here. This is a drawn liquidity. So if price reach here, all right, and I see a, a trade confirmation such as a wick, uh, I'm using order flow. So if I see that order flow tells me that a strong selling pressure is here, then I can take a trade, a CRT or order block entry right here can be valid. And I think that's what the price will do still. I think the price, because we are bearish, so daily we are bearish. On the 4 hour, we just broke the market. We did the market structure shift right here. So bias is bearish for now, right? So price can push it all the way here. We can do a CRT or whatever. If we see confirmations here, then the next target will be here.
Okay.
Yeah, that it can be valid. But if we see like because there's news, huh? There's crazy news. Anything can happen. So for example, if you see that big news is coming and then price just pow, just take away like crazy, then okay, I will change my narrative, right?
Okay.
But once a drawn liquidity is taken, you want to see confirmations. Confirmations is CRT most of the time, three candle model or a underblock entry. But pretty much all the time it's gonna be a three candle model. It's gonna be this model right here, this three candle pattern.
Okay.
All right.
Professor,
Yes.
can we anticipate uh uh since how do you say it? Can we anticipate market structure shift in advance? Like, for example, on that high,
Sorry, I
can
didn't
we
understand your question, bro.
anticipate market structure shift in advance? Like anticipating a market structure shift when it reaches it breaks the weekly high.
So for example, weekly high.
Yes.
Okay,
Then
okay.
when
So
it's breached, can we anticipate
can we anticipate a market structure shift here?
from there? Yeah.
Okay,
When
so for
price breach then
example, if price purge this high, can it be like a market structure shift? Is that what you're
no
saying,
no
bro?
no the 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 bullish candle the bullish weekly candle when
The,
that bullish candle purges, can we anticipate advance market structure shift? Can we
um.
anticipate a market like
Okay. Okay. So
a market structure shift will happen when that purge
when
when the weekly highs purge
okay, so this is the weekly high.
on
This is the
yes
weekly high and market structure shift. So you're saying no, this is a break of structure, it's not the same thing, right? The, because look, on the 4 hour, okay, that was the structure, right? This is the weekly high, so weekly equals 4 hour market structure, right, bro? So
right.
now your question is can we anticipate a market structure shift if this high gets broken?
I mean if the weekly bullish candle the first candle if that on the weekly if
Yeah.
the second candle purchase the first candle
Yeah.
then can we anticipate that the market structure shift will happen on the 4 hour time frame?
But look, market structure shift is way down here, right?
Yes, yes.
This
Can we
is
anticipate the
yes,
market structure shift will happen when the CRT high has been purged?
yes. Look, now I will show you guys another topic, which is how to enter a CRT trade, right? Because now you're saying, okay, so if price purge here, can we expect this low to be taken, right? Can we expect
Yes,
it
yes.
in advance?
Yes, yes, yes,
Yes. So this is how we
yes.
do it. This
So
is
we can trade that one when price purchase that high. We can look for CRT bearish CRTs to take the
yeah.
excess. Am I right?
So I will
Okay,
show
thank you,
you
thank you.
guys. I will show you guys right now how to trade a CRT trade. Okay? I will do some little it's gonna take a little bit a long time, but gonna make a clear so I'm gonna make it clear once and for all for you guys how to enter a trade on a CRT trade, how to enter. First of all, for beginners, okay, for beginners, if you're not well experimented, you need to wait on the third candle. You enter on the third candle. You wait for this to print, right? Model so candle 1, candle 2, and you enter at candle 3. This is the easiest. This is the easiest entry, right? But if you want to enter here on this wick, what this is what I'm doing, right? This is my entries. My entries are way down, way up here at this wick all the times. And how I do it?
Be ready. If you're holding the trade, then you need to expect that price will come back to your entry possibly.
Yeah,
If you're
that's
not moving
why.
out.
Yeah, that's why this is where psychology comes into play. That's why I'm always taking out my position at most of the time 2R, right? Risk to
Yeah.
reward, 2R, cashing out, and that's it. My mind is free. Me,
Yeah.
I can't trade with I can't sleep when a trade is open. Bro, I'm making
Yeah.
nightmares and stuff. I'm dreaming of it. That's fucked
I
up.
know. I know.
I'm dreaming that in my dream I see that my position is in take profit or stop loss. That's fucked up, man. And
Yeah.
now I'm looking at my phone every time and I'm
Yeah.
doing some dumb stuff,
Yeah.
right?
Mentally.
So so yeah, if you were yeah, pretty much, okay, the thing is, look, this is entry, for example, and the price you're gonna go in profit, and then we come back to your price, and then profit, break even. Now you just like, oh, what the fuck, man? Okay, is it gonna hit stop loss or no? Like, I'm
Yeah.
not patient. I'm not a patient guy. I need to have my money right now on the spot. All right. So yes, for me, I'm always taking partials, or I'm taking my whole position off once I'm hitting like 2R or 3R, and I'm waiting
Bro,
for the next opportunity. That's it.
bro, how, how do you manage the risk reward ratio? Like, uh, for example, you have 1:3 R target, then you take partials like 50% of your uh
Yeah.
trade. Then how do you manage the 3%, the TRR? Like, at the end of the trade, it will not be TR, right?
Yeah. So
Like
yeah. So
4
technically,
hours.
so how do I take out my partials? You asking?
Uh, how do you manage the risk reward ratio? Like
Okay.
risk reward ratio.
Yeah. So I will show it here, right?
Okay, okay.
So for example, if I'm entering here, I see my entry model, which I will show you guys right now, right? If I see this here, the we you got the 50% of the range, and the 50% of the range gives me a 2R trade, then at the 50% I'm taking off my trade, and that's it, right? Here it gives me a 5R, for example. If the range is in the weekly, for example, or whatever, man, on the 4 hour, if it's too far and I see that 50% give me a good risk to reward, I'm cashing out at the 50%, right? That's it. This is how my risk to reward is like this. If I'm taking this trade right here, and then the low gives me a 2R or 3R, then I'm gonna hold it till the CRT low is taking. The 50%, like, for example, the 50% gives me like 1R. Then I will go break even at the 50%. I will not taking off any positions, right? I will not taking off some. I will not taking off some profits. I will just put break even, and if it hits break even, then it hits break even. I don't care. But For example, if the 50% of the range gives me a 2R or 3R, then at the 50%, I will take off all my position and that's it. Goodbye. This is how I'm managing my risk to reward. Most most
Okay.
most of the
How about
trade,
the partial? Partial.
huh?
How about how you take partials?
I don't like taking partials. Here's why. Because if you
Oh, okay. I get it. I get it now. I get it now.
everybody taking like even Sham, Romero, they all taking partials at the 50%. Me, I like to have fixed profits on my trade. So for example, if I'm risking 1000, I want 2000 profit. I don't want like one position 1000 and then the other position takes off my break even, because now I will have a 1 hour trade. I don't know, man. I like when my meta trader looks clean, you know? So for example, let's say uh we have a 50% here, low of the range here. If we take partials here, then it's gonna for example, this is 2R at the 50%, right? So 50% is 2R. Then if I take partials and then after that the price take my break even, then it will be a 1 hour trade technically. I don't know if you understand. It will be a one it will be a 1 hour trade. But instead, what I'm doing is I'm taking out all my position here. 2R. I put 1000, I made 2000. I'm happy. Goodbye. So now I need two losses in a
Yes.
row. Two losses in a row to lose this position instead of one loss. Right?
Yeah.
And then, as another perspective, if I'm 100% sure that the price will reach the CRT low, and the CRT low gives me 4R, then I will have made $4,000. But if I'm taking partials here and here, I will made 2,500 or 3,000, I think. Right?
Oh.
So,
How do you tailor stuff or putting LB? What the yeah.
oh, okay,
How do you
uh,
manage that putting stuff? Like how do you put your stuff lower and lower and lower?
I'm not trading my stop loss.
So you accept when it comes to your stop loss. You're not putting B also.
Set and forget.
So not forget. Oh, I get it. I
Set
get
and
it.
forget, bro. Stop loss, take
Yes.
profit. That's it. That's all. I'm not. I'm not trading. I'm not trailing my stop loss and stuff. It's too
Yeah.
emotional, man. It's too emotional because
Absolutely.
if you're trailing your stop loss, then now you hit your stop loss, you made like 700 profit, and then price come back way down, and now you wanna cry.
Huh.
You know,
I was being I always failed. I'm always being failed.
bro. Set and forget, bro. Once you have,
Yeah, yeah, yeah.
I will show you guys how to enter the trade. All right, I will show you guys how to enter the trade.
Yeah,
Once you
yeah.
see this, you don't need to trail your stop loss. The accuracy of this model is crazy, guys. It's crazy. You don't need to trail your stop loss. You just cash out at 50% if it gives you a good risk to reward.
This is the way to go.
Exactly, man. Exactly. So think of it. If you
Yes.
guys want to pass a prop firm challenge, right? A prop firm challenge, and the phase one is 10%. You need five wins with 2R. That's it. 5 wins, man. It's not crazy. 5 wins is not a lot, man. It's five wins at 2R, and you pay phase one is done, and you need 10 losses in a row. You know that's that's why I'm always taking my full position at 2R most of the time. You only need 5 wins to make 10%.
Uh,
On a 100K account, 10% is $10,000. Will you be happy with $10,000? Yes. So you're taking out your position at 2R. If the 50% gives you a 2R, then take out at 50% stress free, man. You don't want to be stressed when you're trading. Fixed take profit, fixed stop loss, and then after that, you're letting it go. That's it, bro.
where do you put your stuff on the lows?
I will sh- I will show you guys. I will show you guys right now.
So what you're
Okay, go,
saying,
go,
and
go.
if you take at 50% of the range at TP1 and the TP2 at the end of the range, stop loss at the top. So you mean even if it's broken out above or below, you don't take another trade there. You just leave it going. You took your profit and get away.
Yeah, I'm taking profit and then I'm looking for the next opportunity. If price the next day is way back here and I see another trade, then okay, I will take it and I will uh, I will put the target here, for example. But sometimes it takes out both, and then I don't care, man. I made my money. I cashed out here, and then I'm waiting for a next opportunity. That's it. So if price goes at the 50% and then consolidation, and then after that price goes a little bit higher like this, then I will say okay, I will enter another trade. But if price take out both, then all right, man, I'm just gonna wait for another opportunity. That's it.
Makes sense.
Yeah. So I will show you
Look
guys.
at gold, what it did. It double perched. So if you were
Yeah.
holding that trade on gold,
Yeah.
then
Oh yeah.
trading off no reason.
You will. Yeah. You will be crying, man. Crying.
Yeah,
Too emotional in there.
yeah,
That was a trade right here. The
yeah.
daily CRT, right? That was the CRT, and then this candle purge.
Mm,
50% is here. Cash out.
yeah,
Look at all the roller coasters, emotions. Look at the
yeah.
emotions you will have been through, like here. Oh
Mm,
shit! I was at 50%. I was at $2,000 profit, and now you're in drawdown, man. This is
mm,
emotion. The emotions come into play, right?
yeah,
Some people are fucking like have big balls, They don't care. But for me, I don't know, man. I don't like to see profits and then drawdown right after it,
You have a
right?
point, bro. You have a point.
It sucks, man. It fucking sucks. Like, even let's imagine you have a 200K funded account, right? And this is your payout, the incoming payouts. You're risking 2,000 to make 4,000, for example. Here you're at 4,000 and now you're holding, and then here you're at minus 1,000. How did you feel?
suicidal.
Suicidal, man. That's why I'm taking off at 50%. If it gives me a good risk to reward, then fuck it, man. I'm cashing out and I'm waiting for another opportunity. Here's another opportunity. Look, for example, this is a three candle model right here. Then, okay, if you see that, then all right, I can enter here and my target can be here, right? But if price just go like this, boom, then all right, I'm gonna wait, and that's it. I'm not gonna, this is where I'm. Like for example, this trade, I cashed out at 50% before news. Price just dumped right away to my full TP. I don't care, bro. I made my money still. Now I have another opportunity, which is what I was. I delete everything, right? Okay, yeah. My other opportunity will be here. I'm just waiting. That's it. So I took my profits here, mind free. Everything's great. I made my money. If price goes there and I see another three candle model, then all right, I'm I'm putting another trade, and then my take profit will be lower. That's how I'm riding the market. So yeah, I was going to explain this to you guys. Let me charge my. Wait a second, guys. I'm coming back. I'm just gonna charge my charging block.
Go on, go on.
All right. So this is a three candle model. Candle one, candle two, candle three. Like this. Candle one, candle two, candle three. How do I enter here? This is my entry here, and how I'm looking at the entry. Mets-toi sur mute, Phil.
Sorry, guys.
It's okay, bro.
Let's go.
All right, so how I'm entering this? Well, it's simple. It's pretty simple. Model 1 entry. Do you guys know what Model 1 entry is? I don't know if you looked at Romero videos and stuff. He explained it. This is basically a order block entry. This is my entry here. A order block entry. So let me explain this to you guys, and I will show you some example. After that, I'm gonna do like two other technical analysis, and then I will be done. So, for example, candle one, now candle two, it's going like this, like this, like this, and like this. And then candle three will be like this, and then like this. Right? So, let me do something like this. Um, where's the rectangle? I'm gonna do some little bit of drawing. All right, so that will be like this, for example, like this. Candle one. I can do the lines. All right, then we'll do something like this. This one will be black, like this. So let's imagine you have the wicks here. Okay, I can't draw the wicks, but this is the wicks. All right. Here, what you want to see? You want to see this order block entry, right? So that will be your entry like this. Order block minus order block like this. Oops. Center, left, right.
Sorry, but quick question.
Yeah, bro.
Are you entering on the actual 4 hour?
Huh?
If it's a weekly one. Are you actually entering on the 4 hour?
On the 4 hour CRT, you said?
Yeah, so let's say if it's a weekly CRT, are you actually entering on the 4 hour chart?
Yeah,
Or are you
bro.
entering on a lower time frame?
4 hour chart. And let me
Oh
mark.
wow. So that's gonna be a big stop loss then, yeah?
Yeah, but at the same time, risk to reward, bro. You're not looking at the pips. You're looking at risk to reward. You're placing
So
the
you're
yeah. So for example,
you're not an intraday trader.
huh?
You're not intraday trader. Like you're a
Yeah,
swing
yeah. I
trader.
am a traded trader.
Oh.
Yeah. So,
Ah.
but for example, look, on GBP, right? That was the three candle model right here, and look what happened on the 4 hour. Did you guys see the order block?
Yeah.
I marked it out. Was like this. I marked it out on
Okay, so
drawn
that's
liquidities. If you go here on drawn liquidities on GBP, look, I marked it out. It was like this. I marked it out like it was like this. I said I want to see something like this, right? Look, that was the entry from here to here, 1 to 2. You cashing out. That's it, right? That was on the weekly.
My God. That's the big.
Oh, so basically, you're just trading the 4 hour next candle, not the whole goddamn range, if I'm correct.
The thing is, you have a 4 hour CRT, you have daily CRT, you have weekly CRT, and you have 1 hour CRT, and you have 15-minute CRT. And then for each CRTs, you got specific time frames entry. So let me mark it out here. So weekly CRT equals 4 hour model 1. Daily CRT equals it was 1 hour. 1 hour model 1. 4 hour CRT equals 15-minute model 1. 1 hour CRT equals 5-minute model 1. This is it, guys. So look, weekly CRT 4 hour model 1. Here, weekly CRT 4 hour model 1. All right. If we go here and is there any 4 hour CRT here? I don't think so.
So you
Uh,
don't care about the macro times and kills
when it comes to weekly, I don't care. Daily, but 4 hour CRT, I'm looking for times purge. So for example, look for gold right now. So for gold, for example, this is not this chart. This is this one. No, this is this one. I will look for a 4-hour CRT here, right?
Okay.
I will look for a 4-hour CRT. Why? Because this is a 4-hour key level. So whenever there's a 4-hour key level CRT or a 1-hour CRT, I will look for the timing purge. And the timing purge for me is inside a session. I'm not looking at specific times like 3 a.m. or 9 a.m. I don't give a shit, bro. I'm looking for sessions. So if it happens inside New York, I'm taking it. If it's happened inside London, I'm taking it. That's it.
Okay.
Yeah.
Yeah, that
So
makes sense. Because
yeah.
sometimes you miss minutes or you get stopped out waiting for this
Sometime
specific key
yeah,
also.
sometimes the purge is at
Especially
2
market.
a.m., sometimes
Yeah.
at 4 a.m.
Yeah. Yeah.
The
Market runs. You're waiting for that 3 a.m. window, and the market's already taken liquidity at 1.
Yeah, exactly, man.
And it just
Exactly.
runs.
Yeah, exactly. So my time windows are from this is a UTC -5 by the way.
Yeah.
So for me, London session is from 2 a.m. to 5 a.m. This is my time window. If I say purge here, CRT purge, I'm taking it. Or New York from 7 to 11. For Forex, indices market opens at 9:30. So you want to see after 9:30. From 9:30 to 11, you want to see a CRT and a purge, and that's it. I'm taking it. I'm not. Some people looking for macros and kill zones and bro, I tried this and I was missing too much opportunity because like mm, kill zone is 9 a.m. for example, the purge occurs at 8 a.m. So I did not trade, you know. So for entries, this is the ones you want to look in for. Daily CRT equals 1 hour model 1. 4 hour CRT equals 15-minute model 1, right? If you look at my trade breakdowns, guys, you will see this all the time. Where is it? Right here. Trade my trade breakdowns all here. Okay. This I think that was a model 1. This is you can see it here. 15 minute. That was a 4 hour CRT and then 15 minutes model 1. Look, my entry is right here. Here, same thing. That was a 1 hour CRT. So 1 hour CRT, 5 minute model 1 entering right here at the order block. Same thing here, I think, on the 5 minute. That was a loss. No, yeah, that was a loss. So that was my entry right here at this order block. Same thing here. All the time, bro. All the time. All the time. This is the way to entering, right? And what I was explaining earlier is that where did I put the drawing? It was here. Yeah, it was here. Whoops, like this. Yeah, like this. You got the CRT high, the CRT low, and you got the key levels. This is gonna be for another topic because I can talk about it for hours. But for a high probability CRT, you need to have key levels and it needs to be at the same direction as your bias, right? So for example, here you got a key level, this three candle model is forming. So when this candle got print, you marked out the high and the low, and here, as soon as you see this model, you're entering, taking profits like here, 2R, and then the next day, you're waiting for the pullback and you're entering the markets again. Here, for example, so you take the trade here, 2R, take out your position, and then next day you see that markets goes like this, test the order block again, turtle soup, you're entering again, and then now you're targeting the low or even the 50% if it did not reach. So this is it. That's how I'm entering this model.
Thank you. Thank you, bro. Thank you, bro.
Yeah, no worries, man. So I'm gonna do other examples for you guys. So
Yes, yes.
I was not finished with this one, I think, right? So now I did this, and step three is narrative. If then, so if, for example, we are bearish, right? So if I see a three candle model here at this fair value gap, I will entering. If I see a three candle model here, I will entering for shorts. This is a narrative. Step one, looking for sell opportunities here. So three candle model on the 4 hour or order block entry, whatever. This is what I'm looking for here. SMT divergence also. It's gonna be another topic, but if you see a SMT with Euro USD, etc. And then this is step one. Step two, price can dump right away, taking out these. And then after that, if I see confirmations, then I will buy. Right? Step one, looking for sales here. Step two, looking for buys here. This is it. This is my narrative for this week, which I will show you guys some drawings, and I'm gonna post it on the group. But this is what I'm looking for. If I see some sales here, I will take it down way down here. If I see buys, I'm gonna buy right here and taking all my positions at 2R, 3R, whatever. So is there another currency you want me to? I'm gonna do an
Can you
analysis.
check GXY?
DXY.
GJ
Yeah.
would be nice.
Okay, so I will do DXY and JJ, and after that,
Yeah.
I'll. So let's see. All right. So step one, looking for key levels on the weekly and daily time frames. Looking for these ones. Bro, that's crazy, man. That's crazy, guys. This is crazy. Also, this is week 3. And I don't know if you guys looked at the quarterly theory, my video. This is crazy, guys. It's gonna be massive. Especially on gold, man. Gold is very clear. You can see like week 1, consolidation, week 2 manipulation, week 3 distribution. I think the price will dump the fuck out, man, this week. Next week, I think the price will go crazy down, man. Let's see. But here, what I'm seeing.
We will see
see the same thing on BTC next week.
Yeah. Let me look at BTC quick, man. Oh yeah, look at that. Well, you got a range. Week 1. That BTC is gonna
Don't
go.
forget, bro, you're in discovery price right now. You need Fibonacci to get your resistance level.
Yeah, exactly. BTC USD, man. 100K. Let's do this one. What you guys can see here. What you guys can see here. It's pretty clear, man. It's pretty clear. Same thing with gold, same thing with GBP, same thing with DXY. What we see here. This is a question for you guys. What key levels you guys see here? CRT, highs, lows, breaker blocks. What you guys see here?
FBG,
Huh?
FBG,
FVG?
FBG and CRT.
Yeah, so CRT. This one, right? This is a clear CRT here, right?
Yeah.
Here you go. Purge inside a fair value gap. All right?
Hey, Yannick,
Yeah.
if you look at the top at 103, the one on the left,
103?
far left. Well, look at your left. You got the order block at the top, at the end top. Go
Right.
on your left. More left. Very far left.
So here?
Like at right there. You're printing right now a SFP during a weekly chart because you're inside that range right now.
Yes, exactly, man.
We're ranging here, so it's either going up to a new ATH or it's going downhill. There's two options.
Yeah.
You're resisting the price right there.
The thing, I think personally that we will do this and then we're gonna flush down.
Yeah.
Do you know, guys, why?
That's the whole point.
If you look at seasonal tendencies, man, this is a cheat code as well. I'm gonna do a video about this. Sham on CPI explained this, but it's not clear. I'm gonna make it clear for you guys. US dollar index. Where is it? I need to find it. If I go like here, for example, it's not here. No, I need to. You know what? Fuck this. I'm gonna go on Google and then US dollar index seasonal. Right here. Okay, so guys, this is a seasonal chart. This chart, this is the data based on the last 30 years. So over the last 30 years, this is what the XY was doing. And my laptop's gonna die 1 second. So this is what the price is doing over the last 30 years. So January, February, March, April. So January bullish, February bullish. All right. It can be like 2 3 months apart. Okay, it's not 100% precise. But what I'm seeing here is that we got 1 touch and 1 point and 2 point here, right? And if I look at the DXY, then look what we see here: 1 point, 2 point, right? You got this big expansion, which is, if we go here, is this one, right? What we did is we took out these 2 points and we did like it's like a double top, like 1 2 and then price goes down at the 50% of this expansion, around the 50%, right? If for example we had a Fibonacci, then we can see that we like at the 50%. So look right here, we are at the 50%, right? 1 touch, 2 touch, we took it up, and on the 4 hour, this is the first point right here. First point. The second point will be here, and then after that is gonna dump. Entering into December, we are at December, and at December, price is overall bearish for DXY. So that's why I think that we're gonna took out this CRT high, and then after that, goodbye, ciao, goodbye. Same thing with gold, man. Gold is bullish for December. If you look at gold, it's bullish for December. If you look at metals and gold, it was here. Gold, look, December is not pretty clear, but look at January, February is bullish, right? And right now, gold, we are like here or here. We are here, I think. This is for another topic, but that's how I'm looking at the overall price. So, for example, DXY, what I'm gonna do is I'm gonna mark out my CRT, so my key levels. So we have a CRT here. So drawn liquidity number 1. This can be another drawn liquidity, right? Drawn liquidity number 2. And this is a high probability one because look, we took out this low, right? This candle show us big selling pressure. So if we go here, price will most likely dump after, right? And for key levels here, then we got this low. This low, it can be another drawn liquidity. Drawn liquidity here. If we go on a daily, we have this order block right above. So let's put it there like this. Here we go. This is our drawn liquidity for next week. Now, weekly weekly key levels equals 4-hour market structure. We're looking at market structure. What can we see here then? Okay. Starting from here. So low, high, low, high, low, high. Market structure shift. Low, high, low. Another market structure shift here. So we are bullish. We are bullish. Okay, we turtle soup this, so we still bullish. High, low, high, low, high, low, high, low. So on the 4-hour, we are bullish. Okay, 4-hour, we are bullish. So what I'm expecting is gonna try it. So if price continue to do this, 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 and then once we are here, there's a SMT with arrow or GBP, and then price start to fall off like this. That will be the market structure shift. So for the next couple weeks, we will be bearish. Or if this low gets broken, this one before the takeoff, then we're gonna be bearish, right? For example, on GBP USD, we are bearish still, right? We are bearish. That's why we are still bullish on the XY, because the XY, it's a correlation, right? Negative correlation. That means when price goes up, euro and GBP goes down. All right. On GBP, we saw that we are bearish. That means that price on the XY can easily goes up and up and up till we reach this level. Right?
Bro, what should we follow? The DXY or the Euro? DXY first?
Yeah, always. You need to have a narrative on
Always DXY
DXY because
before trading the Euro or GBP. Am I right?
yeah, you need to look at DXY first all the time for your bias.
Okay.
Because
Thank you.
yeah, because the bias, as you can see, my bias is for now is bullish. We are bullish for now, right? On DXY. If we are bullish on DXY, then you need to be bearish on these two pairs. You need to be bearish. That's why I have my drawn
Down
liquidities
for
here,
the probably.
and to bug now. But yeah, look on the daily, what we see here, we see a order block here, and we see a three candle model here. You guys see it, right? Look, three candle model, three candle model. So price can go here and then here. This is my narrative for this week, for the next week. Like it's the same thing here. Look, I'm expecting price to go here and then here after, right? Same thing here. This is the correlation. Look, I'm expecting the price to go here and then here. So Step one, I did it. Step two, market structure, I did it. We are bullish on the XY. We are bearish on GU and Euro. So it's great, right? My narrative is 100% perfect for next week. My narrative, if then. So if price go here on this order block, also look at this order block. Order block, CRT low, price, we go here and then here. I will look for buys here. I will look for sells here, right? So this is it for the XY.
Thank you,
This
bro.
this is it for the
Thank
XY.
you. Thank you.
You're welcome. Now, as your request JJ. Let's do JJ. Let's do JJ. Okay. First thing, what we do? This is a question. What we do first thing first?
Mark key levels.
Yes, sir. Looking for key levels on the weekly and daily. Weekly, what we see. So this CRT got fully respected. This CRT got respected. So now price is on the weekly is pretty far, right? Do you think the price will go till there? I don't know. Maybe. There's news, man. There's big news. Look, this is a weekly candle. Massive. This is
Yeah.
another weekly candle, so massive. So yeah, it can reach here. So we're gonna mark it up, right? We're gonna mark it up. This is a drawn liquidity. This is a drawn liquidity here also. That was a pretty good trade here, man. That sucks I wasn't there because look, key
Yeah.
level, we tapped into the key level and weekly equals 4 hour entry. Look at that, man. Fuck. But we didn't tap into the model one. So yeah, I'm pretty happy because look, we came close but we didn't tap in. But this is a model one entry. So now JJ, we got this and we got this on a weekly. Now, since it's far, it's pretty far still. We want some opportunities. We're gonna look at daily to see if we see something. So on the daily, we got this order block, right? It can be interesting, so we're gonna mark it up. We're gonna mark out the this order block, and here, this is another order block here, right? Here, order block. So I'm gonna delete this. So from now on, we want to look at market structure. Since we are interesting into daily key levels, we want to look at the 1 hour market structure. That's what we're gonna do. We're gonna look at the 1 hour structure And what can we see? Then it's pretty clear, bro. We are bullish. Look at that. Since this point, look, market structure shift. Market structure is look super clean on JJ. Super clean. The thing is, like you said last time, he's moving so fucking fast. You
Yeah.
need to be there, bro. You need to be there at the right moment. So yeah, high, low, high, low, high, low, high. Look, this is not a market structure shift, guys. Some people getting trapped here. Look, did we break above this? No. We turtle soup. Still bullish. People looking for sales here, they're getting wrecked. So low, high, low, high, low, high, low. This is a low. Turtle soup, high. We are bullish, right? So for example, on your 1 hour, price can either take out this and then go up. The last low that broke the high is this one. So if we mark this up like this, price can turtle soup this low, take out this daily order block, and then skyrocket after. This is a game plan for JJ, right? Turtle soup this low, tapped in into this key level, forming either a 4 hour or a 1 hour CRT, and then skyrocket till this point. That's the plan, bro. I don't think there's another plan for now. Price can just gives us no entry like the last couple weeks. Fucking JJ. So can just skyrocket and we're just gonna look at it and cry about it. But yeah, price can just skyrocket, and once it reach there, I will look maybe for sales if we see a beautiful CRT. If not, the game plan for JJ for this week for me is we turtle soup this low, tapped in into this daily order block, doing a beautiful three candle model one entry, and then entering the markets and hold till there.
Thanks a lot,
Because
bro.
because JJ once he JJ when I'm gonna take an entry, I'm gonna hold it. No choice, man. It's too fucking volatile.
Yeah.
I'm gonna cash out at 1 R, 2 R, and then price will go like 10 R. That's crazy. Like here, look at that, bro. It's like the price is just is moving too fast. So if we if I got an entry here, I'm gonna hold till maybe like here or here. Like it's gonna be a 4 hour trade minimum. No choice. But yeah, man, this is it for JJ. I'm gonna post
Oh, thanks
everything.
for that, bro.
Yo, no worries. So I'm gonna post everything on Drawn Liquidity. The same thing as I show you guys. I'm gonna also post the video on free content. Right? I'm gonna post the video and yeah, I hope you guys enjoyed this call, and I hope it helps you a lot with Drawn Liquidities. And I'm gonna do a section when everybody can share their drawn liquidities levels, and I want you guys to share your drawn liquidities before mine to see if you guys have the same level as mine. If you guys have the same level as mine, then you made it. Basically, you made it. After that, you just need to wait for the opportunities, which is CRT. That's it.
The biggest problem is coming. If they know how it works, they have to understand how to execute the trade.
Exactly. They need to know it. That's why I put some pretty good videos in there so people can learn how to entering a CRT trade. Also, I explain it how to entering a three candle model, which is uh, this drawing. Where is it? Right there. That's how you're entering. You're either waiting for the third candle or you're entering here, model one. If you guys
Yo, bro.
if you guys go here on the CRT unlock, Romero explain it here how to entering a three candle model.
Can you make a quick look at Solana?
Solana, sure.
Yeah.
Sol
Just
USD.
see if I'm right on that one because I already took profit at 219, but I'm just waiting for lower at this point.
This is the same key levels as I show you on private, bro. I'm still waiting.
So
I'm
you're still waiting.
Yeah, 4 hour key, 4 hour market structure. Okay,
Yeah.
we are
I
bearish
took
as you
I took
can
my pro-
see.
I took
High,
my profit at halfway, so
yeah,
I'm already good on it. Well, I'm in from 232 something, so
yeah,
directly
like,
took out the last time.
yeah, that's a perfect entry, bro.
I know.
That's fucking great. Yeah, bro. This is the drawn liquidity.
All right,
High, low, turtle soup, low, high, low, maybe turtle soup, low, or just straight flush and into the drawn liquidity. Put your stop loss at break even. If you see that we are turtle soup this high, enter again, and then
well, if we go over 236, I believe we're gonna turn bullish because we're gonna go into the next structure
depends, bro.
around there.
Depends.
Well, it depends on the reaction over there,
Yeah,
but we're not
exactly.
there yet.
If price just fucking pump the fuck out, then okay, we're gonna. But at the
Yeah,
same
but there's
time,
still there's still too much liquidity down there at 201.
at the same time, this is the last low that broke. This is the last high that broke the last hollow. Right?
Yeah, I
Need
know.
to break this level. If you see that price is going like this and then forms a CRT here, it's valid for sales still because we still bearish. If we break above this level, then now you can say that we are bullish.
Well, yeah, because it's gonna turn into a breaker block.
Yeah, there's there's massive liquidity out there. I think also that needs to be taken. So for example,
Well,
maybe we're gonna turtle soup
I
this.
shorted it. If I would have stick to the original plan, I would have still been short from 260.
Yeah, yeah, 260. Yeah, yeah, right there at this level. But yeah, drawn liquidity number one, drawn liquidity number two, we are bearish. We making lower highs, lower lows. We turtle soup the highs. We breaking the lows. Oh yeah, bro.
Yeah,
Maybe is there?
and we're making a big range in the 4 hours. So
Yeah.
when the breakout's gonna
Here you
happen, it's
go.
gonna be
Look at that,
massive.
man. Look at that on the daily. Also, you got a CRT right there that formed.
Yeah.
Here you
Whenever
go.
it's gonna break out, it's either going to 180 or it's going to 300 whenever it break out.
Yeah, exactly.
Which man, it's
When
gonna be massive.
oh yeah, when crypto goes, it goes, man. Yeah, fucking 4,000% on fucking XRP, bro. That's insane. Yeah. So yeah, bro, this is it.
Trading the range, or what you call CRT. Well, I call it the range.
Yeah. CRT is range, bro, technically.
I know,
So
I know. Everything's a range. Every candle, every
yeah,
aspect of a candle is a range.
exactly, bro. Yeah. So taking out this one, maybe this one. This is the bias for Solana. This is it.
It's pretty much the same thing that I learned with the GV, but it, now it's in your word and Romeo's word and Sham words. So at this point, we're just communicating easy, the easiest way
Oh,
between us.
exactly, man. Exactly. I'm trying to make it more clear as possible because these guys they talks too much.
Yeah, I know. When I listen to all those videos, I'm like, man, there's so much stuff going on there, but still no information on how to
Uh,
read it, on how you know how to find the block, but you don't like gives you the aspect of what trading is all about.
yeah, exactly, man.
Honestly, Romeo's course, I personally thought it was a waste for me. It was
Yeah.
drawing. Like
Yeah,
scribbles. I was like, are you serious?
Yeah,
Like,
bro.
I mean, Shams is good. I mean, he does long it out quite a lot.
Yeah.
He's made it quite long, but at least he's given you more details as much as he can. But
well,
yeah, Romeo's one was it.
I've learned a lot from Sham, but if
Yeah.
I listen to Romeo videos, man, I was still stuck in the mud. I didn't know what the fuck he was talking about. But whenever I the Sham masterclass,
Yeah.
it reveals a lot of information, but at the end, there's still no execution. If you look at all the videos, there's no execution video of what you need to do or should